Hello, everyone. Welcome back. And today on this module, we're going to talk about you can have a very low income, very low salary. Okay. And you can achieve financial freedom within 10 years. Very,
Mhm.
very low salary. And you can buy this kind of properties. And we can do an apple to apple comparison at the end of this video to compare money you put in to scale this risk portfolio, a very low income,
Right.
and versus a traditional retirement portfolio, do an apple to apple comparison, how much down payment you need to achieve $6,000 a monthly real estate passive income, which money you need on a traditional real estate retirement portfolio to achieve the same $6,000 a monthly income. So
Nice.
it's going to be mind-boggling. So stay tuned, watch this video for the next 15 minutes, and I have an open mind, and you will see the power of real estate investing. Okay, so my name is Seewing. Julie is my co-host. How are you, Julie?
Fine, thank you. Good morning, Seewing.
Good morning. Julie can really speak to this presentation because she have done it. Coming from a horse's mouth.
Mhm,
So
mhm.
it's realistic, it's powerful, it's practical, and it's done by many investors that we work with. So Julie, here it is. Create how to become a millionaire with a low paying job. And we're gonna use you, Julie, as an example. You are one of many examples of using this strategy that I work with our other investors. Am I right, Julie?
Absolutely. Mhm.
Julie have no idea what I'm
Just
presenting.
going along with the program.
You can find out, just go over the program. You can find out soon enough.
Right.
Okay, let me get this over here so you can see the numbers better. Look, these numbers are realistic. I plug this number analysis, this pro forma directly from the listing that we have with one of our amazing turnkey provider here in Buffalo, New York, Niagara
Mhm,
Falls. Again, this is just a pro forma that the real projection down the road could be slightly different, but
mhm.
this is just for educational purposes.
Right.
This property is a representation of the property in the Midwest. Okay. Property in the Midwest, older properties, lower cost, typically from a real estate investor's perspective, you get more cash flow, but less appreciation. Price of these homes are so low.
Mhm.
And as a result, if you buy with all cash, or would you buy with your IRA, or you would do a financing with 20 to 25% down payment, investment
Mhm.
loan, your initial cost is very low,
Right.
but the cash flow is very high. Before we go any further, Julie, I know you have purchased 6
Mhm.
total properties in this particular market,
Right.
and you bought it from our turnkey provider, Buffalo
Mhm.
Turnkey. They do everything. They rehab the property. They buy these distressed properties.
Mhm.
Their local market, they've been doing it for 30 years. They have an amazing, successful track record. The key is if you're an out-of-state investor, you have to buy from a team in a particular
Yeah.
local market who have a track record, who is honest, who have integrity, who
Mhm.
does the right thing. Otherwise, you are going to get burned.
Oh, absolutely. But I think that's the biggest mystery when people ask us, how did you buy out of state? Because we're in California, the property's in New York. And it was really the team. You introduced us to a fantastic team up there in Buffalo, Buffalo. And once you really build that relationship, the process becomes very smooth at that point. Not that you're not going to do a lot of work, but you have to do a lot of your own due diligence. But it's good having a team that you can go to. You have questions, it's the same person you're contacting. So we were really blessed to be able to do that. And it worked out well for us.
Yeah, of course, we're not going to go into details of your
Right.
portfolio. You and I have done numerous
Mhm,
videos in the past 2 years. You document in
mhm,
detail your real estate journey.
mhm.
So suffice to say, the, uh, the information we can provide on this presentation is realistic, something that
Right.
you yourself have done
Absolutely.
probably the past 2 years, and all of our other investors have done similar things using this strategy. And of course, when you buy in this kind of neighborhood, I would call it a C class neighborhood. It's not ghetto. It's not a rough neighborhood.
Right.
It's a C class neighborhood. Just be real. You could have experienced some vacancies now and then. Uh,
Right.
the repair cost on an older property is higher than a newer construction property.
Mhm.
And but still,
It has their pros and cons, but you're looking at the value of the property. Again, being in California, it was such a shock to find that you could actually buy a property for less than $100,000 in New York, in the upstate New York area, because you can barely buy a driveway here for $100,000. So it was just mind blowing to realize, oh, there are other places in the country that you can invest in and actually have a passive income as well as all the other benefits that we've talked about in previous videos.
Well, absolutely. So let's dive in. This performer, and again, you know, this is an actual property uh, per the listings that we received from our network provider, and this is an off market. It's not in a multiple listing service. This company buy distressed properties. They're wholesaler, for the lack of a better word. Our team in Buffalo, Niagara Falls, and they buy at a very low discount from distressed sellers. What a concept!
Mhm.
And
Right.
they use their own team to rehab the property. Okay.
Mhm.
And because they've done so many rehabs in the local market for so many years, they'll discount materials do we have from a local Home Depot, whatever. And
Mhm.
the discount savings is passed on to real estate investors, out of state investors like us. So when we buy these kind of properties, you can pretty much say that we buy it at below market
Mhm.
value. Would you
Mhm.
agree?
Yeah, I would agree with that. And I was thinking when we purchased our properties, because I did a lot of research, I checked the comps and I did all that before making the offer. And I noticed that all the properties that we bought tended to be slightly below the market. So they're not trying to gouge you. They know that they're working with investors. I think it's a win for everybody. They're making money. We're taking advantage of the lower price point, plus not having to compete against the MLS and all that other stuff too. It's really the way they have designed their business. And I haven't worked with your other teams around the country, but the way they're designed, it's a win for everybody.
Yeah. Julie, not just that. This is a family owned business.
Right.
The father is in his late 60s, early 70s. He's still in the business, but his children are
Right.
running the business.
Yes.
No,
Mhm.
Caleb Canazzi is the important contact for outside for investors. They will have they have their own property management team. They have their own rehab team.
I totally can respect the whole family business concept because I think I've shared before. I grew up in a family business, so I do understand what it takes to facilitate that, and the fact that he's been able to pass this concept down to his children that they're carrying on the vision. And like I said, they operate with a lot of integrity, so I felt very comfortable working with them.
Absolutely. And they know which neighborhood to buy properties, which, how, what area rents well, what area have the lowest crime possible. It's just, they find the right neighborhood to rehab this property, to make it turnkey, to put
Right.
tenant in place,
Mhm.
all turnkey rehab ready to rent. And in our property management, you can buy multiple properties in this market or
Mhm.
cash or using your self-directed IRA or do investment loan financing. A lender, they're not going to finance a property if the property are not livable. The property is not in
Right.
bad condition, right?
Mhm.
When you do the loan process, a lot of lenders, they do not do loans on a small purchase like this. It's not profitable.
Right. That's a good point.
But you and I, we have lenders that do that. We have
Right.
A Wells Fargo loan consultant, and we have
Right.
that can do these small
Chip Manning.
loans. We have
Mhm.
Richard Advani, my go-to network lender. He can
Mhm.
also do these kind of small loans because they do
Mhm.
so many of these loans by volume.
Mhm.
It meets their profit margin.
Mhm. They won't. And I think that's something that is important about working with a mentor, working with a team. People, but I think the average person that just wants to get an investment, buy a few, two, three, four properties, they're not going to know this information up front. And if they don't have someone working, they can go to 30 banks and they're all going to be like, no, we can't do that. And until they may randomly hit the right one. So it's great to have a team, a working team in place to guide you.
Absolutely. When you do the loan, when you go through the escrow, when a lender gives you a loan for this kind of small properties, they get an appraisal. You have to do appraisal, and the appraiser can appraise your property. If your property are not meeting their safety standard, or
Right.
the rehab is not up to level, that the appraisal is going to fail, and your loan is gonna be, you can't do the loan, right?
Mhm.
So these properties are appraised properly, or the neighborhood comps.
Right.
These are appraised properly. Your loan will go through.
Right.
That's
Right. Absolutely.
people don't understand that, because
Mhm.
the rehab they do on this property is very high quality, and they are so ethical.
Mhm.
So this wholesaler that we work with over the years, if you're
Right.
a policy investor, a very busy person,
Mhm.
want to scale your risk portfolio, could be anywhere in the country. If you find a
Right.
right team in a way that we just described, that's pressure. That's a no-brainer. That's
Oh,
amazing.
absolutely. And I think that one of the things I learned just coming into this business, it's about developing those relationships.
Mhm.
Because it is working with somebody over several months of a period of time. You want to be able to have that open dialogue and communication so that you know that you're getting what they say you're getting.
Absolutely. Okay. Here's a deal. Okay. These are amazing deals. People always talk,
Amazing deal.
and people use the word deal so often. DEAL. Oh, don't buy any kind of property if you cannot get a good deal. What do you mean by good deal? Bigger pockets. They encourage you to find your own deal through the MLS, make 1,000 stupid offers, 40% below market value, find a distressful seller, and then rehab your own property in that
Right.
particular market and manage those properties yourself.
That's a lot of work. Work.
I don't know about you, but I'm not going to do that.
Oh,
Especially,
it almost, what do they say? It's like throwing spaghetti on the wall to see what sticks. By using the turnkey providers, it's so much more efficient use of your time than trying to find that one distressed property or whatever that you can do that particular transaction. And it can be very successful, but it's like, how much can you continue to do that?
yeah, if you want to scale your properties, if you're from out of state, if you have a regular full-time job, you are trading time for dollars. You're paying yourself $8 per hour, whatever,
That's
to
it.
manage your property, to evict the tenant, to go
It's,
into the property, to change the doorknob, do all the rehab work yourself, to address all the ongoing maintenance and repairs.
right.
I'm not going to trade my time for dollars.
Exactly.
I will delegate. I will let other people do all the hard work for me. And all you and I have to do, just pay an extra 8% of the rent for the property fee. 8% off your rent to pay a property full-time property manager to do everything for you. That's
Mhm.
not a deal killer. That's
Yeah. And it completely makes sense. Yeah, pay someone else to do that. That's a more efficient use of your time. And then you can spend your time going out looking for the next deal, working with them to get the next deal.
another concept. I hate to harp on bigger pockets because they are the largest community.
Right.
They have 1 million
Information.
subscribers. You and I know every single day they promote this type of concept. Do it yourself. Oh, you don't manage all 100 doors by yourself. You
Right.
make money by not paying the property management.
Yeah.
And
Because you're talking about a full time job. Every time a light bulb breaks or a smoke detector goes out, you got to be on that. That's too much.
another concept, bigger pockets and all the other so-called YouTube influencers, the real estate gurus out there, they promote everywhere, right? They also promote BRRRR strategy. You know what that means? Okay. You know what?
You buy what a rehab, refinance. I mean, there's like the whole, but yeah, it's a do it yourselfer, a DIY.
You buy, you rehab, you renovate, you
Right.
refinance,
Right.
then you rent it out to a renter, and
Mhm.
then go to another BRRRR strategy.
Right. Exactly.
Us,
Mhm.
they do all the dirty work. They find the distress
Mhm.
in the market. They do the BRRR strategy.
Right.
And once they finish the BRRRR strategy,
Mhm.
they sell the off market, not on an MLS property, to our investors.
Mhm.
And
Mhm.
we buy a Turkey property at below market value. We are getting the benefit of the BRRRR strategy from them.
I remember, I think it might have been last year or maybe a couple of years ago, you had Caleb, you interviewed him on one of your monthly meetings. And he said that he had this one client that would buy from them and then turn around and sell it because they were selling it to the investor for under market. Then the investor would check the MLS, see what it's selling for, and then he would sell it, and then he'd come back to them and buy a new one. So that's exactly what it is. They're doing all the burr part, and all he's doing is reselling it.
Yeah. We
I don't recommend that, but it worked for him.
Today market, I would not recommend that. What this called fix and flip, right? Essentially, that's what it is. But 2 or 3 years ago, when the market was hot, right, 2021, you can do the burst strategy and sell it for fix and flip and pocket the money short term and go. But
exactly,
those are the ideal market. You bought it in an excellent market 2.5 years ago in 2021, where appreciation is skyrocketing everywhere, and rent has gone up dramatically everywhere over the country. So
absolutely,
for Niagara Falls, you're getting the benefit of this pandemic, boom, if you will.
Yeah, you're right. Right.
Julie, I watch other people's podcasts, all the so-called real estate gurus, not just, I don't discredit Bigger Pockets. They help a lot of people over the years.
Wealth of information, for sure.
Yeah. But it's laughable when I watch some of their podcasts on a weekly basis.
I think it can be overwhelming. I think you have to, even watching them, because I did do a lot of watching them when I first decided to get in the business, but I knew what I was looking for. Because there's 15 million strategies you can use to do real estate. So I would just plug into what I needed to know for my particular style. But it can be, the information can be so overwhelming. What do you call it? Like a paralysis by analysis? It's like you just don't know which way to go. And you're just stuck like watching videos for the rest of your life instead of taking action.
Yeah, exactly. Okay, let's not harp on them, okay? I respect them. There's a lot of good consulting companies.
Absolutely.
But there's a lot of bad real estate gurus out there who will charge you $20,000 of a coaching fee. At the end of the day, after you pay $20,000 for coaching, you have no money left over to buy.
Right, exactly. You can just use that to buy this property. $21,000 to invest to buy this property.
So, Julie, before I go over the meat of the potato, what we're talking about, it's passionate about what we're doing. I hope hundreds, if not thousands, of those investors for the past 20 years. That's how long I've been in the business.
that cash flow.
This property is one of many properties. In this part of Turnkey, they have off-market listings. They have more inventory now. They have a lot more listings, off-market listings available exclusively to our investors only.
Wow.
Their listings are not for the general public. They market mom and pop investors from California, from other part of the U.S., and overseas. From UK, they come over the Buffalo Turnkey portfolio and buy with all cash.
Right.
Investors from overseas on a monthly basis, from what I hear consistently, they buy 5 or 10 of this type of properties. Because they know what they're getting. They're getting return. They're getting a massive return. They're not getting too much appreciation. We know that. But we're getting some appreciation for the future, but not as good as other more expensive properties in Florida and Texas. I'm not discrediting Florida and Texas that we're promoting in even Alabama. Those are very good properties. But if you want scale, if you want a minimal down payment, if you want high cash flow, if you want passive income 5 years from now, this is the kind of strategy you can do. And this property is just one sample. They have many more properties similar to this on a monthly basis. Not only duplex, they have single family home for $60,000, $70,000. Duplex, in this case, $69,000. They have triplex for $100,000, fourplex for $150,000. All have a very high return. Okay.
That's really $69,000. That is right in line with the 6 properties that we bought. So very realistic. Everything we bought, the individual properties, each one of them was less than $100,000. So it doesn't take a lot, but the return on the back end is huge.
Yeah. Okay. Even we factor in, I'm factor in vacancy factor 3%,
right?
Management fee 10%, maintenance percentage around 5%, and you're getting a loan. You're getting an investment loan for investor for 7% investment loan rate on a duplex of $69,000. And your down payment is a little bit more than $20,000. This duplex on both doors rent for a total of $1,350. So each door rents for a little bit less than $700 per door, right? Minus all the debt service, we minus the mortgage payment of $340, we minus annual monthly taxes, insurance, property management fee, the maintenance and upkeep per over here. At the end of the day, you get a monthly net cash flow in excess of $600, which equal to 2% rent to value ratio.
That's unbelievable, unheard of.
That is unrealistic, but it is realistic.
That's
But
double
it
the
is
1%
true.
rule. That's
True,
double.
to be true, Julie.
It is true, though.
Kind of property are available on every single week on the off-market inventory listing that I get from our partner, Buffalo Team.
Actually, thinking my husband's the duplex that we put in his retirement, it gets about a 1.5% rate to value since they bumped up the rents the last 2 years. So yeah, it gets about a 1.5% rent to value.
I believe it. That's cash cow updates.
Yeah, absolutely.
Look, again, this is not a typo. Okay, some people watching this video still do not believe that we're talking about this. They think, no, too good to be true. Not true. I'm not going to do it.
It's true. Because some people are taking advantage of it.
Half a typical property, cash flow property in the country, the benchmark is 0.5% rent to value ratio.
Wow.
1% is considered amazing. 1% multiplied by the purchase price equal to gross monthly rent as an ideal benchmark, which is not happening in most part of the country because during the pandemic, prices have skyrocketed double, triple, quadruple percent rate, and the rent have not caught up with those skyrocketing home prices increases. Therefore, it's very difficult to cash flow anywhere in the country 1%, let alone 2 freaking percent.
Exactly.
That's beyond imaginable. And then, furthermore, what's over here? Furthermore, capitalization rate of 16.6%. I'm not going to go over the numerical formulas, how you calculate it. A capitalization rate of 5% is normal for cash flow, for literally 20% down, whatever.
Now you're getting triple, better than triple.
16.6 capitalization rate is unheard of, especially today, 2024. Cash and cash return, 35%.
Unbelievable.
What does that mean? In about 3 years, giving this cash and cash return, your net cash flow in 3 years will pay it off your down payment.
Your down payment, yeah.
And after that, what's going to happen?
You're going to be sitting pretty.
Basically, 10x, 15x, 20x long-term investing. Anyway, so annual net cash flow, the first year alone, $7,400. Net annual cash flow divided by your down payment. That's how you determine the cash on cash return.
That's a great investment right there.
Okay. Keep this in mind, $600 per monthly cash flow. So next question is, by the way, we're talking about only this type of duplex. We have triplex and fourplex, even a couple of fiveplex available in the turnkey investment listing from time to time on a monthly basis. They have, like I said earlier, their off-market listing is very low because the house sell very quick. Now, not as many people buying for whatever reason, higher mortgage rate, or the miss. Now you have less competition for smart investors. They can take advantage of this ample inventory listings available in this market, giving this return yield. Each 21 grand you put in, potentially you can get at least $600 monthly cash flow due to bump up higher because you can raise your rent. Hopefully, at the rate of inflation, if the inflation is 5 to 7% right now, you expect your rent to increase on an annual basis. Your passive income, your cash flow will continue to increase for the foreseeable future. So, keep this number in mind. This is the key for their financial freedom. So I'm not saying everybody's situation should do this. Some people have no money to invest, so they can't do any of this. Some people say, I don't want old properties. I just want to buy brand new properties. I just want to buy in California. Yeah, you pay $2 million for the property. Yeah, if you have $2 million cash to buy a rental property in California, let's do an apple to apple comparison. Each 20 grand, you have a $600 monthly cash flow, right? If you have $100,000, just do the math.
5 properties.
5 duplexes,
There you go.
and you get $600 monthly net cash flow the first year,
Mm-hmm.
$3,000 monthly net passive income cash flow from 5 of these duplexes. Now, some people,
Right.
you can make the argument, Julie, some people can retire off these 3 grand. If some people already have other investments, they have a social security income of 3,500, whatever, they have a small pension, they have some other IRA. So if you're age 50, age 55, who's to say you cannot retire $6,000 or $7,000 per month and travel the world? Everybody have different type of a retirement goal. Some people need more money to retire. Okay, let's say you need more money to retire. You're not ready to retire yet. You're too young, whatever. You have the money for the next 5 to 10 years to buy 10 of these duplexes. Do the math. If you have $200,000 of cash lying around in your bank account or in your mutual funds or on your liquid portfolio, get 25% down payment and buy 10 of these duplexes, $69,000 per property on a monthly basis, quarterly basis, whatever scale. Do the math, 10 properties times $600 monthly net cash flow.
Right.
But net cash flow at the end of your 10 rental property purchase for net positive cash flow of $6,000.
That's huge. And that can only go up. You're considering that's the first year, but the rents are going to go up. You're going to get the loans paid down, but eventually it's all gravy.
Okay, if we have to pay some maintenance, some vacancies, maybe not 6,000, maybe 5,500. Still pretty darn good.
Right. It's very good. It's very good.
Now, for you to buy 10 of these properties, giving the best case scenario, how long potentially does it take for a motivated, determined investor to potentially buy 10 rentals? It's a trick question. How long it takes to scale 10 of these properties? Based on real experience, I'm going to give you the answer. Based on real experience. How long it take?
Well, I tell you my own experience. It took us a little under 2 years to get the 6 properties.
Do you know you can buy 10 properties all at one time in 45 days? You do a loan.
Right.
Theoretically, technically speaking, this is doable. You know why? Because our investors have done it. If you have 200 grand, if you qualify for the loan, you do 25% down payment, you can close escrow all 10 properties at one time. Yes, you can. So you can make the argument if somebody had $200,000 cash, you could retire with $6,000 next month.
That's true. Because actually, I think you encouraged me on the last 2 properties that we bought. And we ran those escrows simultaneously and we closed them both on the same day.
Yeah, and this is very ambitious. It has been done before. I know, if you talk to any good lender, any loan agent that we have, our in-house loan agent, and he's guarantee rate, a guarantee rate mortgage, and the world's lender that does a loan in New York for us, he can do it. You can do it multiple. I'm not saying everybody should do that. If you patient, if you have the discipline, if you have the ambition to get multiple loans all at one time. But okay, at the end of the day, the reality is, even for motivated investor, most of you will do 1 or 2 rental property, and you don't have enough experience, you don't have enough courage, whatever. But you can do it fast. You can scale 5 to 10 property in the next few months, in the next few years. I did very well. My portfolio years ago that I purchased allowed me to travel to 50 countries in the past 10 years.
Wow, what a lifestyle.
Yeah, I go to cruises all over the world on a annual basis. Anyway, enough of that. So let's do an apple to apple comparison. How much? Okay, hold on. Let me move this over. How much traditional? This is a very important question, okay? For those of you guys watching this video, if you have a financial advisor, a traditional financial advisor, you will talk to this person at age 60 or 65 when somebody to retire. Julie, you and I know that for traditional stock or whatever advisor. How much traditional IRA retirement portfolio do you need to withdraw the equivalent $6,000 per month at 4% withdrawal rate? Why is the standard 4% withdrawal rate is the benchmark? Tell me why.
It's been a lot of years, but I think that's just based on your lifespan. You don't want to take out more than 4% because you don't want your money to run out before you do.
Right. You answer correctly. See, even I ask you a spontaneous question, you get it. You awesome. That's right.
Yeah.
When you reach the age of 60 or above and you will retire with your IRA portfolio, your advisor, whoever they are, Charles Schwab,
Mhm.
Fidelity, or Dreyfus, advisor you have, when you reach that age, you need to rebalance your traditional IRA portfolio based on the risk tolerance,
Right.
based on your age level, because that's the compliance rules. That's the NASD, National
Right.
Securities Dealers rule. That's the SEC, sort of a Security and Exchange Commission. For the traditional advisors, when they are managing your portfolio, they have used the benchmark of 4% withdrawal rate because based on your life expectancy, they do not
Right.
withdraw more than this amount of money. Otherwise, your life going to exceed your available money to live for the rest of your life.
Mhm.
You want
Mhm.
to make your money
Right.
last. You could preserve your
Mhm.
principal and live off the interest of your IRA
Mhm.
portfolio.
No, you're absolutely right.
Yeah, to validate what I'm saying, you guys watching this video, whoever you are, consult with your financial advisor. They will give you this scenario. If you over the years when you're younger, you could afford to take more risk, so your risk tolerance is higher. So
Higher.
you could invest in large cap or high tech stocks or overseas stock portfolio.
Mhm.
They
Mhm.
give a high rate of return but high risk. But when you're reaching down the retirement level, the pre-retirement, when
Right. Right.
whatever your financial advisor does that are managing your portfolio, they can recommend you rebalance your portfolio into money market, into bonds, into treasury,
Mhm. Mhm.
low risk portfolio, so you could draw the income stream and not losing the principal for the remaining 20 or 30 years of your life beyond traditional retirement age. Am I right?
Absolutely. 100%. Mhm.
With that said, I'm going to conclude this presentation with this powerful apple to apple comparison. And here it is.
This conclusion. Yes.
And conclusion is, the question is how much traditional IRA before you need in order to withdraw 6,000. My calculation indicates that you need $2 million of your IRA to draw
Mhm.
6,000, as opposed to $200,000 cash,
Exactly.
10 rental properties to equal 6,000.
It's night and day. Yeah. My God, if I had the 2,000,000, I'd go out and buy. I'd spend it all on property.
Just go to show you apple to apple comparison, leveraging real estate, scale properly, find
Right.
the right cash flow market, find the right trusted team out there
Right.
who can meet your goals. You need 200 to 2 million, 1/10 the amount of money
Right.
to reach the retirement income level. If you do not do real estate, you need $2 million IRA. How many people in the country have $2 million IRA? 6,000.
Yeah.
If you
Not too many.
Not too many. If you watch any of the surveys they do from time to time, how much money do you need for retirement? Is it 1 million enough to retire? Most people, based on the survey, says no, 1
Yeah.
million is
Yeah.
not enough to retire comfortably. They say, is $2 million is enough? Most people say, yeah, pretty much
Mhm.
is enough. The money behavior of most Americans, only a
Mhm.
minute percentage of
Yeah.
Americans were able to accumulate to
Right.
$1
Right.
at age 60, 65.
I believe that. I
They
believe that.
only live off the Social Security.
You can't make it off of that.
Okay, I think we have proven our point. Okay, this is a game changer. You don't
Right.
see this kind of presentation.
We're just trying to teach the truth.
This is a no-brainer. This is realistic.
You have to put the work in. You got to do the research and you have to not get discouraged if things don't flow exactly perfect.
Absolutely. Okay, again, to recap, if you this how the power was investing, if you do it right. I'm not saying this for everybody, but you can do it. It's not theory, it's practical. You have you're doing it in this market and it works. Anyway, thank you for watching. If you receive any value whatsoever, please like and subscribe to my YouTube channel and put your email into my website database, you will receive weekly free newsletters to talk about these kind of strategies and much more about risk investing. Thank you so much
Right.
for attending. Thank you. Have a nice day. Bye.